Welcome to the FNO InsureTech podcast, a place where movers and shakers from all points within the insurance ecosystem gather and discuss all things InsureTech. Here are your hosts, Lee Boyd and Rob Beller.
Hey, podcast world, welcome to another remarkable edition of your favorite podcast and mine, the only one you listen to. In fact, I think the only podcast there is in the United States or the world, for that matter.
Acquired? No. I really like that podcast.
It's not your turn to talk. It's not your turn to talk.
But that's a really good podcast.
Please stop talking.
Saying. Oh, my bad.
I'll say what everybody, all of our listeners are saying right now. Please stop talking, Lee. That's what they're all thinking. More Rob, less Lee.
We do get that. We get that in writing. Please give us more Rob.
Welcome to another edition of FNO InsureTech. That's Lee Boyd. Maybe I'll come to some podcasts, and most of them I won't.
I have missed a couple, and I apologize.
Oh
I apologize to the
guest.
guest.
Let's talk about that for a second. Where in the world have you been, Carmen San Diego?
I actually have traveled an unbelievable amount this year. I was telling my son last night, like, where I've been, and it's every major city and hub from London to Los Angeles I have been. And it's been a busy year.
Good. It's good to be busy, isn't it?
I work at home, and I work in a little room all by myself. And so whenever I get to travel, I can go see my coworkers. I can see my teams. I can see clients. Traveling is a great way to be a part. And so I'm very fortunate that I get to go out and see people and be a part.
Well, you know what people do who aren't anywhere near as busy as you?
What's that?
They have wonderful conversations with foremost people in the world of InsureTech, like Tim Attia.
That's true.
Does that name ring a bell to you, Mr. I'm Too Busy?
I know Tim Attia. I get to see Tim Attia all around different conferences. He's a man about town.
Yes, I bet you saw him at Target Markets.
I don't know if I did, to be honest.
Oops.
I always have,
there.
Though. I always have. For the past 3 years, I've always seen him.
He was there. We had Tim Attia on years ago.
Yeah.
And we were so excited because Tim was a top 50 InsureTech influencer. And for us to get those people on was always really exciting.
You were so giddy. Giddy whenever we got a top 50 on.
And he was wonderful and generous.
He was.
And this time was exactly the same. And he told us the story that you're about to hear of Slice Labs and the journey that they've been on over these many years. And the good news is they're still there, but it's a nuanced story, and I think you're really going to enjoy it.
I can't wait to hear it. You might have given me a little insight, and I'm excited to hear it from the man, the myth, the legend himself.
He is that, but I want to say this about Tim, and Tim, this is a shout out to you. Incredibly generous guy. Thank you. And as far as we're concerned, you're still a top 50 influencer in the InsureTech world. But I think Tim's gotten busy running a business that's taken off, and you're going to hear all about that. So without further ado, let's just get to our conversation with Tim Attia, CEO, co-founder at Slice Labs. Hey, everybody. We're here with our special guest, I believe this is your third time on the show today.
Second, I believe.
We had an episode with you.
Oh, yes.
An ancient episode. And then we had a little special show that we did about when Lemonade went public.
That's correct.
And we wanted to get different people's takes on it, and you gave us one.
Yes.
And boy, that seems like forever ago, doesn't it?
It does. Yeah. It seems like another time.
It was in so many ways. We're here with Tim Attia, who's CEO and co-founder at Slice Labs. A really interesting story. And yes, Slice Labs is still out there chugging along and doing well. And you're going to hear about that in the next few minutes. Welcome back to our podcast.
Thanks for having me, Rob. Nice to be back.
It's
good to still be here.
Before we started recording today, we were talking about that. The way that we originally got to Tim, this is 2020 was our first podcast with you. I think it was during COVID. And in that, at that time, there were many InsureTech top 50 lists, top 50 most influential companies, top 50 most influential people. Tim was always a top 10 guy in all those. So for a little crazy nothing podcast to get Tim Attia was a big deal and very exciting for us. And there's not so many top 50 lists anymore.
No.
And they're certainly not populated by the same people.
No, they're not. Yeah, there's a lot of different lists and things have changed a lot. Yeah.
And things have changed a lot with you. One of the places where I'd like to get started today is to talk about the evolution and growing up, if you will, of Slice Labs and how you guys, when we did your original episode, I listened to it. We talked all about business one way, and then there was a pivot. Tell us. Let's get started with that story. You were chugging along on the old path, and then what happened?
Yeah. So we started. If I rewind, it was on-demand insurance. The idea of on-demand insurance is you tap on the button and you're insured, or you're just insured, and focus on the on-demand economy, on the sort of the new economy, the gig economy. And one of the things we did want to do was start an open space, right? So we don't want to have to, come out head to head with big guys with just the cost of acquisition. So, innovating and open in a niche was sort of, the strategy, right? And the challenge with niches, of course, is you could wake up and it's filled and all that nice stuff. It's a niche. And I would say the last time we spoke, we were still, chugging along in that niche. We were about to hit, or had just hit COVID, and with our Airbnb product, we were basically processing cancellations. But things were looking good. We were growing. There was a lot of enthusiasm that, we were going into the UK, we were going into Southeast Asia. There was a lot of, big expansion. I don't think on anybody's mind was the word, EBITDA, the acronym EBITDA was not in the vocabulary.
That was so passe. It was like, for 2017.
It was a bad word, and, profit wasn't on the horizon, and wasn't even something you even, made it an objective, even vaguely. And when COVID hit, it sort of, made us look at the model, and, we were selling a lot. We were into this, micro market, right? You're selling a lot of small on-demand policies. We'd done a lot of really innovative products. We put them out really quickly, but none of them had a lot of volume. The good news, by the way, is we didn't have a lot of losses. So the programs performed. So I remember on our, we would get our profit share on our product, but the bad news was, you wouldn't build premium very quickly. And I think, so I think COVID made us sit back and look at it and go, well, is this really a business, right? Are we going to be able to get big on really small policies? And I think at that time, we had sort of finished building the platform. We partnered with carriers, multiple products in multiple jurisdictions. And then, one day we woke up and the platform was kind of finished. Because it takes a lot of money to build it, and we partnered to build it, and we're sort of done. And I think that coincided with COVID, and we said, well, maybe it's time now to go out with just the Slarts brand, and rather than the small gig worker, let's work our way up to larger contractors. And we were always doing E&S, we're always surplus lines, so our platform always did specialty insurance. So how do we make our way from $1 a night E&S policies to, which was really hard, by the way. There's a lot of innovation in an $8 E&S policy, especially when the stamping fee in a state might be $50. You're at $8. But there was a lot of innovation to get that to work. But we basically, in the middle of COVID, it was during COVID, we partnered with a large, and we took our platform, which we had already built. So we already spent all this time building it, and we put out a product for larger contractors, for, general contractors, remodelers, artisan contractors. We put out a product, and now I think the first time we touched agents, was with our cyber products when we were working with Excel on cyber. They came to us and said, hey, we're going direct on it and we're, want to embed it in Microsoft, but we also have, these agencies that we work with. And so we started working with the agencies. And so we started we started building that. And, when you have an E&S product, you distribute it through MGAs and wholesalers. And we started to work through that distribution channel. And what we realized was, the agents were sort of ready for that experience. I don't know if that makes sense. So we put it out under our own brand, threw it out there, one product, available through, wholesalers, MGAs, and the agents just started migrating to it. And I think that if it's a $2,900 policy, the traditional approach for, I'm a Main Street America agent. I don't have a lot of commercial lines appointments. Don't really know a lot about commercial lines. Somebody comes in, they want to insure their pickup truck, and they happen to be a landscaper. And so that agent goes to an MGA or wholesaler because they don't have access to markets. And it's also something that the traditional guys won't write, the big guys won't write. And they replace it through an MGA wholesaler. The challenge being that they can place the pickup truck really quickly, but it could take a couple of weeks of filling out accord forms and supplementals and loss runs and stuff they don't even really understand. We gave them this experience where they can go straight through 5 minutes. There's no underwriter in the process, put in the credit card, pay for it, and it's done. And they just migrated towards it. Whereas the hypothesis was, consumers were going to move there. That's a tougher one. I think the agents just started migrating to us, and not just us. There were a lot of digital platforms that came along at that time that were putting that were going to wholesalers and MGAs for distribution, even though, online and to their investors, and we were talking direct, they were distributing, they were showing up right beside us, right? All the ones that were like, oh yeah, we're disrupting the agent, we're showing up right beside us at the same place. With one of the differences being, we always did E&S. And most of the other ones were working on admitted lines.
Right.
So when it came to automating E&S, where we sort of had the advantage because we spent 5 years doing it, and so we went out our slice, and we went out in surplus lines, and we're distributing through wholesalers and MGAs, so you have to pay commissions through that channel. But it just started growing, and I think the other thing that we got lucky. It's all about luck and timing. You have to pay homage to the gods with luck and timing. And that the specialty market just started to grow like 20% year over year, and it was growing. Everything was getting weird. Even homeowners now are like starting to get a little weird, and everything. And that's a great market for when you're unsure or the newer risk. And so we had the platform. The agents started migrating to it, and that just moved us sort of quickly, just grew. We grew really quickly and moved us much more quickly to profitability. I mean, it made all the difference compared to doing really cool small products for smaller premiums. And, we just didn't write enough of it. The premiums weren't big enough. And one thing about the E&S market, is there's fee revenue, right? It's a combination when you're E&S of commission revenue and fee revenue. And that's one of the reasons we're not the only ones, right? The E&S market is, I think, attractive from that perspective. So I think that the combination of those two things sort of moved us forward. And we just started seeing all this momentum. And the agent's option was they could go to this digital platform that the MGA has, that they can get multiple quotes from 3 carriers, but they got to talk with somebody in a call center. They got to submit the court forms, blah, blah. Or they can just, or they can just come straight through. We had, by the way, by that time, up until April of this year, we still hadn't built a screen for an underwriter. But we had to build our first screen. We had to build our first screen for an underwriter, right? So we started with maximum $7,500 in premium. Then we went to maximum $10,000. We went now $15,000. AM Best A++ paper. So right from the beginning, even with our very solid paper, and it just started growing. So we just added more and more mid-size wholesalers, MGAs. So we probably have 8 or 9 of them, and maybe 9,000 agents behind that. Then we start, we so we have a whole bunch of agents on the platform, and they love that process. And then, we were like, okay, should we add more products? Because all we're doing is selling GL. Should we add more products?
Yeah.
And
I just want to ask, what was the kind of cornerstone product that this success was coming from?
Contractors GL. So artisan contractors GL for general contractors, remodelers, electricians, drywallers. So general
and they take a policy
for,
out. They take a policy out to cover them, or on each project that they're working on.
This is straight up annual policy. Yeah, okay. Straight up annual renewable policy. We do have a per job product now, so we do have a project-based product as well. But it's just a straight up taking our experience and pointing it at something that everybody was looking at, but just had a that didn't have a great experience behind it. Right.
So you made it super easy. You took a lot of the friction out. It was one and done, boom, boom. And of course, agents loved it because, like you said, maybe they lacked some of the expertise of dealing with it. And bada bing, bada boom, they had a policy.
Yeah. And back in 2019, before we spoke in 2020, we launched Streamline, which is sort of our AI ML play at the client. And one of the first things out of the gate, but we did a bunch of stuff on the claim side. We even auto settled some claims in Canada. But one of the things out of the gate was automatically classifying businesses. That one really kind of kept paying dividends. So when the agent comes in and says, here's the classes of the business, based on all of the stuff we've written before, there's sort of like this big constellation of classes and businesses. So it comes back to even say, you're sure that they don't do these other classes. So a lot of that stuff to help them sort of properly classify the business. And it was just straight through. Don't have to talk to anybody. It's to take a couple of weeks. It's 5 minutes. And frankly, we were not the only ones doing that. A lot of people took their technology that they pointed at consumers and pointed it at agents. So all of the usual suspects that you mentioned along the line, they did the same thing. They showed up right beside us, right? So and the agents just loved it. Yeah.
So was your marketing just better? I mean, why did you succeed in particular?
It's really because it was easier. I think there's a couple of different things. It's got to be fast and it's got to be easy. Yes. I think the other side of it is it's got to be a good product, a good quality product. I think if you're going out there with I'm going to call it a crappy product, so there's a lot of exclusions or you're writing on crappy paper, then I think that matters as well. I think it's the quality of the product as well. If you want staying capacity, you need to have quality product. And so we did that, and we were writing, as I mentioned, maximum 7,500. Then we moved to maximum 10,000 premium. Then we moved now to 15,000. And then, but we were starting to see people come through with 40,000, 50,000, and we were just letting it drop on the floor. And so last year we got we got the okay with our provider to go to higher premiums. So let's call it average 25,000. And I would say based on the technology that we had done, let's say circa 10 years ago, it would have been a challenge. But then the world shifted, right? So all this new technology came out, and all of these companies are spending hundreds of billions of dollars on this new technology. And not only has it made it easier for us to build things, right? Quicker for our engineers to build things. It just made it so that we could, so what happens? So we made it so even when we're doing, let's go back to on demand, right? On demand is, when we were doing home share, you just give me your address and email address, name, and we'll go get the rest of it, right? So then we kind of went up to a higher premium, but they had to fill out, 5 screens, right? And we're like, so that's going from 3 questions to 5 screens, higher premiums. Now we're like, now with the new technology, we can say, give us your record form, your supplemental, your loss runs, and maybe you don't have any screens. And so the new technology is sort of even taking it one step further, right? Now, just why even bother typing it in? Just give me the stuff you already have. And so it's sort of moved up another, technology has allowed us to sort of bring that same experience to an even higher premium. And we were like, okay, well, why don't we put out MPL? Why don't we put out, these guys, just like this professional liability, let's expand to other classes, let's add other products. The challenge with that is it takes time to build those products. We built a lot of products. You don't know how well they're going to grow. And I think the first time there, until you get there, until you get the product out, right? And one of those things that we would forecast the way sort of probably everybody does. You start with 3 tabs in a spreadsheet, and that 3 tabs becomes 30, and by state, by class, by assumptions on renewal rate, assumptions, your assumption on top of assumption or top assumption in these spreadsheets. And then a couple of years ago, with this new technology came out, generative stuff. We were like, well, why don't we take our history and just generate policies going forward? And so rather than having a bunch of spreadsheets, let's just generate policies in the future based on policies behind this. And we found that doing that, it was a lot more realistic. It picked up things like seasonality, but one of the things it picked up was we were way too optimistic on when we put out a new product. And based on that, we said, rather than putting out a new product, go from average 2,900 to average 20,000 on the same product.
Right.
It's pretty obvious, by the way. We just didn't see it. We didn't see it at all.
Essentially the same policy to a larger
thing. Yeah. Because you're already seeing it. We already were getting all these requests that we would just let fall on the ground. But again, now all of a sudden we do need a screen for an underwriter, right? So, and so that, how do you bring the same experience to these larger policies? And I think with the hundreds of billions of dollars being spent by all these big tech companies in the new technology, I don't think we would have gotten there. I think so. That's the other kind of luck and timing, where we didn't know that the world, from a technology perspective, was going to shift 3 years ago. Well, if we didn't know that right?
What LLMs were going to do for a company like yours, and et cetera, the world of AI.
And we don't have the the overhead to sort of roll it out and implement it that some of the bigger guys have. So it's just easier to adopt. And we already had the view with the whole slice mind that that's where things were going. So there's a bunch of things we had to do to get there, and so we just expanded on that and mentioned people will classify risk by class code and so forth, and payroll or revenues. But so now we just expanded it so that there's this new technology, but there's sort of like this, I'm going to call it slice mind, this neural network that we understand, how we've taken risks. So we've expanded geolocation and so forth. And then we have a whole bunch of insights on those risks that could be done by an LLM, but also by an underwriter. There's a bunch of insights. Yeah. And then there's a bunch of metrics, right? How did that perform, right? How did you price it? How did it perform? What were rockets? And so you can't just have the LLMs and magically you're there. You got to have this, I'm going to call it mind that it sits on top of. And so that's where we've gone. We've now moved up to higher premiums. And that's really, you asked about this, the pivot or the shift. That was the shift. Move to higher premiums. There.
So I mean, I'm sure it was a pivot, but it was really just kind of the insights of doing business and kind of discovering things, right? Like you started doing a new line, and wow, this is great, and it's big. I mean, I'm wondering about the agents and MGAs. They must have been feeding back to you saying, you know what, we really need this product or we really need that product. Is that must be a source of very important information to you?
Absolutely. Yeah. And it's an interesting one, right? So if you look at, the split of commercial business, you could look at how much small commercial, I'm going to even go, more narrow, small commercial specialty E&S business is there is in the US. And then you say, okay, well, how much of that business is direct consumer, right? And how much of that business is, let's call it embedded, right? So it's like embedded in another process. Everybody's been talking about embedded, and we played around with it early. And how much of that is just, at an agent's door, right? Or wholesaler's door. And, just came back from, WSIA, WSIA, and, there's a lot of premium sitting with those guys. And that's the reality, right? If you've got a lot of time to wait for the industry to shift, that's great. But if you don't, you sort of have to go where the premium is. And that's where the premium is. And I think we've also found that, through those channels, the business does come to you underwritten. I don't know if that makes sense, right? So if you're trying to sort of nudge honesty in the online world, there's just nothing, that to replace that human connection, right? If somebody, is in small, Main Street America, and they took, the agent in the town took, the daughter or sister to the prom, there's an inherent underwriting built into that, I don't know if that makes sense, which has been hard to replicate online. We've been trying with behavioral economics and so forth to replicate that online, but it's very hard to replicate it online. So I don't think we have an issue with paying the commission, I guess is where I'm going, right?
It's earned by, they have intelligence that you can't get elsewhere.
Exactly. And they have the business is sort of at their doorstep, right? So you sort of want to meet the business where it is. So if it shifts, then you want to be able to meet the business where it is, I think.
Well, how does it get underwritten? I mean, is that part of the platform that does that work?
Yeah. So for our, we just put
particularly
out,
as your premiums get larger, and I assume your risks get more substantial.
So we just put out, I don't want, I think we call it mid-market, but I don't want to call it mid-market. I'm going to call it like middle, upper small, so let's say average 25,000 premium, that type of stuff. But not our average 2,900 in premium, so, it was always underwritten by the machine. All of our products were, no screens for underwriting. We hadn't built a screen for an underwriter. So the machine, was always underwriting with algorithm, right? So that's always been the approach. Right now, to go up to the next level, we are bringing a human into the underwriting, one of our underwriters into the process, but they are behind. Like, so let's say that somebody comes into our small business flow and they get knocked out because the premium is over 20,000 or 15,000, right? So it's a $25,000 premium. They're asked to provide things like accord forms and supplementals and loss runs, but there's no people reading those documents. If they're emailed into us or just uploaded, we have the machine reading those documents and doing all the insights in those documents, and all the technology that's around now, right? So there's a bunch of agents that run off and do a bunch of tasks, and they go out and check websites and it just goes out and does, I'll call it the heavy lift. And as I mentioned, we supplement the data. So you basically, the mind part or the neural network part is you sort of take the data you bring in and you expand it with geolocation and all kinds of other stuff. Then you have a whole bunch of insights on it. The insight is a combination of, the machine, the AI, and the underwriter who creates the insight. Then you have a whole bunch of sort of statistics on it, right? How does it perform in the past? What did you price it in the past? Did you win a lot of risks in the past? And so those are three, we call it risk DNA. Those are kind of three strands of the risk DNA. So it's sort of like this constellation. So it knows where the risk sits in this constellation versus other risks. And it's not just, is it the same class code as another risk? It's where it sits on all of those metrics in a constellation. And so that with the technology is sort of how we're handling. So when I think I mentioned our growth in small business. So in the 3 or 4 years that we grew the small business really quickly, I think we added one person.
Wow, that's wonderful.
Well, that's how you get
as
to
a
the
businessman.
That's how you get to the profitability. So the question is, going up to the higher premium is, am I going to need a room? How can I do this? Because for us, this digital or AI enabled is all about how do you do it without people in the process. And so we launched our new. So I think we had our largest R&D effort in the history of our company over the last. We went live in April, May, and it allowed us to do a couple of things. It allowed us to go up to higher premiums and contractors without adding people. Again, jury's still out because it's still news, and our insurance take the while. Our other book, we know our losses now because it's we've got enough history on it, so we know our loss history. So it's still early days, but we haven't had to on people. So that's the important part.
And the proof is in the pudding. How's your loss ratio?
The loss ratio on the small book is now, we're at our profit share, and you need 3 years of history and all that kind of stuff is performing very well. So like to the expectation for us to get our profit share. So by the way, our old products also performed well. They just didn't grow. So they just didn't have the volume that we're seeing now.
So what you guys built works.
It works. Absolutely.
The automated underwriter, if you will.
Average of $2,100 in premium, it works. The next level with the new technology is still, we see the promise. It's in production. I don't think there's, I don't know, a lot of people that have it in production to the level yet that we're doing right now. And I think, it's the technology is hard and the insurance is harder. So that's, by the way, that's also what I learned. So
I wanted to ask you that part.
Yeah.
Talk about that for a minute. The insurance is harder.
Yeah. I mean, it's, you're predicting the future. So it's inherently, difficult. Like, so how do you know that you made a good decision, right? So let's say we're really building this decision, with a risk DNA, what we're trying to do is any business would get fingerprinted or whatever, you can know where it falls in this sort of constellation, but you don't know how well so you're trying to use that to make better decisions. So where it sits relative to other risks you've written by because these are large vectors, lots of dimensions of where they sit. You're trying to make a better decision, but the decision, you already know if it's a good decision in the future, right? So it's only a good decision if based on future losses. So that makes it inherently difficult. But the other side of it is, I'm trying to give some examples. When we first started 2-3 years ago using some of these new technologies, based on, generative AI and so forth, at one point we started almost canceling everything at new business because, really it was, they were a little bit, they were following the rules a little too closely. Humans are have a little bit more judgment built into it, right? So the performance of the book is going to be dependent on, where we are in the future. But yeah, from the small business perspective, we know it performs, and we're out there with, very high rated paper. It's performing, it's growing. I think that if we hadn't sort of worked our way through the process to get there to where we are right now, if we would have just jumped in too quickly, we would be losing money for the next 100 years. We would have underpriced there. There's a downside to really, really fast growth. You start writing things. I mean, earlier days we were writing tree trimmers and roofers. We're not writing tree trimmers and roofers anymore. Well, roofers can be part of general contractors, sub to a general contractor. So yeah, but the reason it's so complicated is, I think because it's up to human judgment. You could take every factor of a risk, right? So every, factor in the risk, what do they do? Are they doing any, how many stories? What are they doing? You can lay out these factors. You can supplement it with, geolocation, and you just have all these factors. But the next sort of dimension is insights. Well, what do you think about it? And I think the LLMs can help you with what do you think about that, right? But that's generally a human, right? When you, okay, great, you have all this thing, but what are your insights? Or what are the insights? So those are not, how many stories do you work at? And, that's, it's an insight, right? And that insight changes over time. And if I ask the same person in the morning and I ask them after lunch, I'll get a different answer. And that's actually how it works, right? With humans, we know, or how it performs, what he gives me a different answer depending how they feel.
Our macro world is dynamic, more dynamic than what the machines can keep up with.
That's a difficult one, right? I could talk to an underwriter and they'll go, oh, well, I know that if I work with this agent in this office in Chicago that, and by the way, here's that agent's name that, it'll be, and you're like, well, how do you, like, that's not written in an underwriting rule book. so not a lot of it, it's judgment based, right? And it's human judgment based. So, but the last part is just performance, right? So if you also knew, and humans are not so good at that, and that's really the last kind of big, factor or part of the DNA is this, how have that performed? Like, have you priced it? Has it been profitable? To what certainty? Humans are actually not so good at that. They kind of forget, but the insights are infinite, right? If I ask one underwriter for insights, their insights are very different because it's based on experience and history. But the insights are very valuable. It's not just about the data; it's about the insights.
Fascinating.
And and that makes it very difficult. And that's we have a human in the loop now for the larger stuff. So the machine does come out with all the insights, and some of them are like, oh, I never thought of that, and it does do
a human. Wow, you guys are going old school on us. Now, wow, a human. Wow. Well, but speaking of that, I mean, I love that scaling for you guys has not meant, building a payroll proportionally. And that's the promise of InsureTech ultimately, right? Is that can happen, that we can scale effectively, whatever it may be.
Yes.
Without it blowing up.
And the small business files, the larger business is, again, without this new shift in technology, I don't think it would have been possible. It's now in the realm of possibility. Again, it just means that, one underwriter can handle a lot more because they're not, the machine's doing a lot of work and finding insights from them and just, sort of making them better. But there's other things you can do that they couldn't do before. And you could have two underwriters look at it now, right? Because as an example, right, so you have this capability that because there is more time that you might be able to improve the decisions by, that there's some human factors to deal with two people looking at one thing and who's going to be right and all that stuff. But you can have, you can do things that you couldn't do before.
So you mentioned before we started today about conferences, which I thought was just an interesting thing that's insightful. And that is, in the day, the technology conferences were exciting and sexy and the energy, to be fair, the energy very high, and bringing a level of energy to an insurance conference that you'd never seen before. I myself have been around the insurance business for a long time. We were used to going to insurance conferences and going to bed at 9:00 in the evening. That wasn't the case anymore. But you said that it used to be the technology conferences, but now where you go is the WSIAs and the Target Markets, et cetera.
Yeah.
And that's because you're just more focused on rev.
Yeah, I don't know. I just find those conferences more exhilarating and more interesting and more exciting. The focus is on the business, which is ultimately where you want to be. So it's on the capacity providers and the distribution. And I find that the energy, I was just in San Diego or WSIA, and I find the energy is just much, I find the tech conferences have gotten just really, fuzzy, big, hard to understand what's going on, hard to see through. If you go, 2 years ago, I remember 2 years ago going to a conference and, there was one booth that popped up and they talk about LLMs and AI and, and I remember asking somebody, what are they doing? And they're like, oh yeah. All of a sudden, now you walk in and every single booth just sitting up there praying, and it just becomes really sort of, I find it very noisy and not very close to the customer or what's actually happening. And I find some of the other ones, like business happens, but you're right. I think we've now gotten into growth mode and execution mode, and those things are interesting. But, the new technologies are great, but I find that that some of these conferences are just a little bit, a little bit noisy. But you can't not go to the tech stuff because, and I'm not talking about the InsureTech conference, but without the OpenAIs and the Anthropics of the world and the the Amazons and the Microsofts that are spending hundreds and hundreds of billions of dollars on this stuff, we wouldn't get there. Because it's not just about what we can do for the underwriter, it's what can happen for our developers, right? So what can our developers do now that they couldn't do 3 years ago? And so it was just been a huge shift, and you got to be close to that. And you have to show up where the OpenAI, the Anthropics, and those guys are showing up. I mean, you just got to. But I think that none of those things are going to show a lot of value unless they can provide specific returns to an industry. It's not about the the Claude LLM. It's about, well, what are you going to do? What are you going to do with your specialty insurance underwriting or claims process, right? I mean, that's and I think they realize it, by the way. I think all of these companies are verticalizing. They're going through the traditional process that technology in the past has gone through. They're like, okay, everybody's got the internet now. How do we create the vertical application? Whether it's CRM
Right.
or the policy admin system, you're going to have to verticalize this stuff. And I think they are. They're quickly verticalizing,
Yeah.
and so they're doing they're spending so much money, and they're building so many roads and bridges and infrastructure that you got to use it. Because
hope
there's
it all
no way
lead-
you.
I hope they know what they're doing, right? And it'll lead somewhere.
It'll go through a process, right? So they'll start building their own consulting organization. They'll start bringing in some insurance people. They'll have an insurance vertical. They, I think some of them have already built like financial services. Sort of. They're going to start. Luckily the consumer stuff aside, but they're going to start verticalizing. I believe that's what they're going to do. And so
Sure.
they'll start understanding our business more and more. They're going to have to. And learning how to deal with us and work with us. And I think they're going to become more and more, valuable to they'll verticalize. Yeah.
So you didn't say this in words, but what I'm picking up from you is really you're very positive and bullish on the business, and maybe not just slice slabs appropriately, but I mean, you guys, you've grown and changed and evolved. I prefer evolved than pivoted. Evolved, and so as you look out at this time, which is, I mean, I don't think there's any dispute that this is a revolutionary time, at minimum on the technology side, if not even broader than that in the world. It's a revolutionary time. How's that looking over the next few years? You must feel like you're in a great position.
Yes,
Exciting time.
Yeah, I think so. I think a couple of different things. I think with our view to move up to higher premiums is the hypothesis, right? So can we move up to higher premiums and provide value at higher premiums? And with the new technology, maybe we could also, we're just adding a second line of business, by the way. It's closer to construction, right? So we're adding another line in our small business, but it's a sort of adjacent to contractors. And but I think in the mid market, we feel, and with the new technology, we might be able to expand our products a little bit quicker. But we would do it at higher premiums. We would stick to the higher premiums. So that's kind of the hypothesis we have. We're back to, can we grow our premiums to a higher average premium? And can we with the new technology, maybe expand our product set a little bit more? But, with the caveat that what I told you before, when you put out new products, you're unsure of, you're more unsure of the sort of the pro forma on how it's going to grow and how it's going to perform and how it's going to do. We've always been of the mind that we were going to partner with carriers and so forth. So, I think we more and more, get close. We've always been that way, right? We've always been sort of close to carriers. We partner with them, our investors, and most of the carriers and reinsurers. And so that's something that we've, sort of in our DNA. And so we're looking for ways to get a little bit closer to some of those carriers. So I mentioned our mid-market platform that's using all the newer LLM AIs. We managed to get, one of the carrier underwriters out, right? So that's kind of interesting, right? Now, we're not the only ones using it. We got
as a customer of the
that was a customer. No. We're selling our product, and we have a program with them, right? So it's our product. It's a program with them. And as the business is coming through, we said, hey, why don't you, the larger stuff, why don't you come on and take a look, kind of thing, right? I think they're all going to do it. All of the big guys, they're looking at the new technology. We don't license our technology. They're on there on the business that's coming through us with larger stuff. But one of the reasons is we want to show them the possibility, right? Because they're pulling, our cord forms out of emails and reading them and retyping them, and it's just, it's just to give them a view of the new stuff. And then when we start talking risk DNA and risk fingerprints, then I remember when I was with our partners recently, they're like, okay, I know every time we see you, we're going to hear something new. I'm like, okay, let's peel back and talk about why it works, right? Like behind why you're seeing it works. Because it's not just about something that understands language, right? It has to primarily have an insurance context. It needs an insurance neural network that understands risk and is learning from, insights, data that gets augmented and insights and statistics on that stuff. So, we peel it back a layer for them, right? Because they'll have underwriter so they're, we see them we get feedback from them on what do you think? But we don't have the capability to transform these guys. We can transform ourselves. We're good at that.
What's great and not surprising is that all these organizations, which 5 years, 10 years ago, we were complaining about how slow they are and about how resistant they are, that organizations like that are now game.
Yes.
They're game. And the evolution has occurred that they're willing and even able to understand it, right?
Absolutely. And I think if it wasn't for
those are big changes.
If it wasn't for this whole, if you want to use the word InsureTech, if it wasn't for this whole last 10 years of InsureTech, they wouldn't be there either. I think that there was things that happened there that made them think differently, and then all of a sudden the world changed. Like if we were starting 3 years ago, 4 years ago, would look very different right now. Everything would have been AI native, right? It would have been, you would have been at the center of it, neural network. You would have started with an AI centric product, right? You would have started. I mean, that's the benefit, I think, of people that are starting up now. They have the opportunity to start completely AI native. And I think there's technology is always overhyped, but as a tool, it just helps you in so many ways as a tool. It's just, it's a stair step shift in technology. And there's no doubt. I mean, the work we do, I was on a flight back. I was in Germany last week, and I was on a flight into my connection, and there's a guy sitting in front of me, and he used to fly to San Francisco, and there was always somebody coding all the way there. And they were sitting there writing code all the way to San Francisco. And this guy in front of me was coding, but he was completely coding it in Claude first with the LLM and then cutting and pasting it into, it was the work. I was watching over his shoulder. His work process was completely different. And I'm sure a lot quicker and more efficient based on it. It doesn't mean that there isn't, a lot of hard work to be done. And, I remember way back when new tools came out to code, and all of a sudden everybody was a programmer, but not really. But it was interesting to see that their actual work process has changed, right? They were working hand in hand with, and our developers were working with, with similar tools, right? With our tooling to code. And what that means is that everybody's jobs change, right? Because if you're a product manager or you're in you have the capability to sort of, almost, prototype an app rather than just, have it in Figma or whatever. I'm getting at, right? It's just the way your work has changed, not just for the underwriters. It's
And
to me, it's newer.
I mean, on our podcast, and we'll bring it to a close here. On our podcast, in the last year, we can't stop talking about AI, and to the point where it's boring. But the fact of the matter is that everything is legitimately changing, and even the stuff that they haven't figured out yet. Wait a year, and I think you can attest to the fact that a year from now it's going to be different.
And for the circle all the way back, the insurance is harder than the technology, right? So it's great. It's great, and it's great that you can use it to do technology quicker. But the real benefit is going to be if we can use it to do insurance better, write better insurance, provide better protection, provide better, claims. That's where I think you look for the biggest impact. Can we tackle something that's inherently really, really difficult? I mean, insurance is just predicting the future is
even still today.
Even though we bring back the Greeks and the Oracle or whatever, like they're just predicting the future and just, So I think that there's a real, and we're not there yet. We're not there, and the proof is not there. But I think that the opportunity is in tackling something that is just inherently very, very difficult. More difficult than the technology, which is, how to underwrite and how to manage, how to, make decisions in crowns and make better decisions. That's going to be harder.
I have a palm reader right up the street from my house.
So, last story, it was the president of, what was it, Romania? I'm trying to remember this story. It might have been from Economics or something, who decided to outlaw fortune tellers. And the reason was he used the fortune teller and got the wrong answer. So he decided to outlaw. He went to pass a law that if you made a fortune that was wrong, you could go to jail. And I was telling this story to the Casualty Actuarial Society, to a bunch of actuaries, and I was like, you know what? It's actually not a bad idea. Your decisions would be better if you got them wrong.
If there was a larger penalty. That's right.
Larger penalty.
Right. And that reminds me of the 8-ball, that 8-ball toy.
Exactly.
Sometimes says, answer not clear.
Exactly. So it's a tough one, but I think there's a real opportunity, and we'll see. The next 5 years will be interesting. Yeah.
Well, listen, I hope we have you back on before the next 5 years. It's been about 5 years, but I have to say, after talking to you today, well worth the wait. Congratulations on your continued success, and I hope our paths cross out there in the real world sometime soon.
Absolutely, and great to reconnect. Really appreciate it.
Thanks, Tim. Bye now. A fascinating story, a great story. I hope that you all enjoyed it as much as I did, having it told to me, but not being told to Lee Boyd.
No, and I apologize once again that I was not there. I'm sorry, Tim, but what a great podcast.
And great of you to be with us today, Mr. Boyd. And thank you for all of you listeners who listen to our podcast. And thank you to Israel for making our podcast. And until next time, we'll say
goodbye, everybody.